Okay, welcome everyone. We'll start our new unit, which is our next unit, which we finish, the other unit, auditing just recently, and then we'll start from today our new unit, Unit 6, corporate reporting, and today is lesson 1, and lesson 1 will address learning outcome 1 and learning outcome 2, which we'll go through. So before starting our session today, so those don't know me, my name Anjum Satar. So my email addresses are here. In case if you need me, please drop me email. So so before starting, first we'll go through what we're supposed to learn under this unit, and then we'll start, our proper session. So welcome everyone. So corporate reporting, unit 6, level 7. Level 7 is a mandatory unit. To pass this unit, we're supposed to address all these learning outcome and assessment criteria, understand the accounting and finance regulatory framework. So really we need to understand what is the difference between international accounting standard, local accounting standards, how we can set, all the standards in account. These standards are important. To identify the main sources for regulatory framework, evaluate the impact accounting and finance regulatory framework on businesses, which we'll go through, and we'll go through assess areas of abuse and exploitations in accounting and financial reporting, so which we'll go through with the various examples as well. So second learning outcome, which we'll address today as well, understanding accounting concept, principle and theories behind, identify the key accounting concept, which we'll go through, principles and theories, and then we'll discuss, importance of all these principles, why these are important. So next lesson we'll go through how we can interpret the financial information. We'll discuss different financial ratios, and we'll try to interpret the information which we can use for the reporting purpose, how we can report and how we can use to make the financial decision. So next, now we'll go through last learning outcome, which will go through be able to demonstrate specific policies, practice and regulation with the corporate accounting. So I wish we'll achieve in next lesson remaining 2 learning outcome. So inductive contents, what we're supposed to do, please, when you do your assignment, so please focus on this inductive content. So we'll address all this address all these learning outcomes. So this will go through. Okay, so next we'll go through history of accounting and financial information, document development, early auditing systems, this development, growth, expansion strategies in the company's performance, budget creation, business decision, on what basis business decision we can make. So all this will go through, and we need to be focused, investment decision, on what basis we can. So regulatory framework, which I'll go through with you, really today will be focused. And then next our learning outcome 2, which will go through concept, principle, theories, rule, and the guidance financial accounting profession. The concept of principle theories include accrual concept, prudence, materiality, consistency. So all these, which we'll go through today lesson as well. If you have any questions, so please do not hesitate me, and just carry on dropping me, carry on chatting in the chat box at the side, because I mute you all. The reason is the background, the noise. We just want to make sure, when we do recording, we'll do really, all people can understand and clearly they can see. So let's, now we'll start our session today. So please, if you have any question, just drop me in chat box and I'll discuss with you as well. So our first learning outcome, understand the accounting and finance regulatory framework, which we'll go through and understand accounting concept, principle, and theories behind that. So I'll refer you a good few other theories which you can include, when what make conceptual framework. So just a bit, overview about conceptual framework. So conceptual framework, all the rules and regulations behind, and all the ethics are both qualitative and quantitative concept, behind this, how we can actually make accounting profession more trustable. It's increase its validity, and the people supposed to be provide the true and fair views about the financial statement. So investor and the user or the stakeholders can make effective decision based on the financial information. So conceptual framework consists of the qualitative characteristic of financial statement, element of financial statement. So financial statement consists of our assets, our liability, equities, income statement, and expenses. So when we're looking under the qualitative characteristic, we'll go through fundamental is a relevant, faithful representation. That's a fundamental of financial statement. Enhancing some other characteristic which we need to be follow: comparability, verifiability, timeline. So with time, really, financial statement should be produced or should be generated within a time frame, and understandability. The financial statement need to be understandable. Anybody, any questions? So please just chat in the chat room, the chat box, at the side. So if you have any question, please ask me or drop me email if you're just listening this presentation. This is a recording of this lesson. So next, now we're looking. Okay. 2010 conceptual framework for financial reporting. Provide a context with which to develop the financial reporting standard. It includes the discussion objective of financial reporting. Why we need to really report? Think about the financial reporting. Financial reporting is meant to provide the financial information to our user, and the financial on the basis of the financial information, people can make decision. Like think about when you're declaring the profit, you're declaring how many worth of asset this company has, and then of course on the basis of this company, different stakeholder investors especially can make the decision. Supplier can provide the goods on credit to companies on the basis of the financial information which contain in the financial statement. So next, definition of element of financial statement. Really, we need to know what is the asset, what is the liability, what is meant by income, what is meant by expense. So all this we need to be really recognized in the financial statements. Any question? Anybody, any questions? So please ask me. Okay, so next we look around user of financial statement, or we call stakeholders. Those are the user of a financial statement. Investor, current investor or potential future investor are the user. Customer, supplier, competitor, lender, government, regulatory bodies like a regulatory organization like a Ministry of Finance, Ministry of other law. So implies management, public, including specific interest group such as environmentalists. So those are, want to protect the environment. So we need to look around financial element in the financial statement. Asset, what is meant by asset? A resource controlled by entity as a result of the past events from which future economics benefit are expected to flow to the entity. So entity mean is our organization. If you have an asset and asset don't have any economics value, think about the Windows 98 CDs. If we have in our warehouse, those CDs is outdated. Really nobody is using anymore those software. So those software is outdated. Those are scrap, in our warehouse. So those assets not really going to flow future economics benefit in our organization. So we need to be really focused on. We need to treat, Any question?
Yeah, let's छोड़ दें, क्या बताऊं?
Anybody, any question? So So next we need to look around the classify as either current asset and non-current asset. So current asset mean the asset which we can use within 12 months. The asset, the values is carry on shining, and the non-current asset which we can use more than 12 months, like building, plant, machinery, and the current asset like a cash, inventories, prepaid, receivable. Their figures carry on shining within a year. So that's called current assets. They're normally the short-term assets, and those are also known as the most liquid assets in the organization. So next we'll go through, anybody any question? Expense. So we discuss asset. So next we're looking now liability. What is meant by liability? Liability, some people say, with simple word we can say something we owe it is called not own it, owe it. Own it is asset, owe it is a liability. So a present obligation of entity arising from the past event, the settlement of which is expected result in flow from the entity of resources embodying economics benefits. So we need to be look around the liability is a legal obligation which arise due to the past events, result in outflow. Outflow means the cash will go out from the organization. It's normally reduce the economics benefit, when you're making the payment. But actually, when you're buying it, its asset is increase it. Of course, when you're making the payments, normally the asset is decreasing. So of course, which reduce the. So income, a financial statement, under the financial statement in an income statement, which is income and expenses go. So increase in the economics benefit. Anything increase the economic benefit is called income. Accounting period in form of inflow, like think about the cash coming in the business. Sales is we are selling more goods, assets are decreasing, the liability result increase in the equity, other than those regulatory contribution to the equity participant. So we need to be look around the income. Expenses, normally the expenses decrease the economics benefit during the accounting period in form of outflow. Normally when we have a more and more expenditure, so it means we need to make more and more payments. So when we making more and more payments, actually will decrease the economics benefit. So anybody any question? Okay, anybody any questions? Please ask me. Okay, next we discuss liability, we discuss income. So next we are now discussing our, please ask me if any question. Equity. What is meant by equity? Equity is also known as a share capital. Share capital also we use is a share capital, or the capital of the company is increase or decrease. So we need to be look around the residual interest in the asset of entity after deducting its liability. So a couple of you already know what make accounting equation. Accounting equation. So if you want to be check the company's performance, we can add all the assets and we minus all the liabilities. So it's equal to our net assets. So net asset equal to always, net asset figure is always equal to capital. If your net assets will increase, so your capital also will be increased as well. So that's all about equity. So what make capital itself as a opening capital, opening investment, opening capital figure, which is normally given the start of the period. Then we have further investment, always investment if you have during the year, plus your profit for the year, and if you have a drawing, we are drawing something out of business for personal use, so we minus it. So this will carry on, and then of course this will be our make our capital. So next we looking the component of set of financial statement. So main purpose of financial statement to provide information to the wide range of users. So financial statement help to be measure the performance. So when we looking the performance, what make performance? So always normally we look performance in term of time, in term of cost, and in term of quality. So that's fine. Financial statement can be provide financial information, and the financial information can be about the cost. At the time is every year, and the quality we need to look around. So the quality is more about the customer satisfaction. So our user satisfaction is high, so we can look around, but the financial statement more about the time and the cost. So that will help us to measure the performance in terms of. So the statement of financial position is all consist of asset, liabilities, and entities capital. Capital mean the investment in the business, like in the previous I mentioned, you net asset equal to capital. So the statement of profit and loss, as the word indicate, is also known as the income statement or statement of a comprehensive income. They provide the information about the performance of the company. In like, we're looking in income statement. Income statement, we always have a revenue. Revenue also known as sales and also known as turnover. So that's and if you minus your cost of capital, how much is cost of sales? If you minus your cost of sales, that give us gross profit. Gross profit mean how much you bought it, how much cost you, how much you sold it, how much cost you, and equal to gross profit. But we have other expenses, so if you less other expenses like overheads, so is equal to we also called operating profit. It can be before tax, and if we minus is after tax, that can be net profit. So this way we can calculate, and all this come under the statement of the profit and loss, which we are comparing year by year to measure the performance of organization. So statement of chain equity, which shows how many shares we issued during the period. It's also provide how much retained earning. Anybody knows what is meant by retained earning? Retained earning, it means previous year profit. Retained profit is also called retained earning. So this normally shows under the statement of chain equity how much was the last year, how much we have now, how much dividend we paid, all under. If you want to be check, if you're an investor, you want to check, the information, how many shares, how much value, nominal value, or the share value, or the face value, or the market value, or the share premium, all we can find under the statement of chain in equity last year, this year, what changes happened. Then we have a statement of cash flow. Cash flow statement normally have three activities. Statement of cash flow, so always we're looking investing activities, so cash generate from investing activities. Operating activity mean day-to-day business, which normally have, if we have a spare cash, we can invest in other companies or in other assets, so that's called investing activity. So how much cash we generate, the cash was negative or positive. Some is called financing activity. That's also be impact our cash flow. So how much is the cash being came, or how much we cash use to settle the our legal obligation towards liability. So this also come under the financing activity, which we need to go through. So this cash flow help us to see actually cash. So you can add asset, liabilities is fine, those can be on the credit, but actually cash flow is most liquid asset, which is always good to be look around the cash position of the company before making any decision either to invest or you don't want to invest in the company. The component of set financial statement, which we already explained, and the disclosure mean disclosure, like disclosure, we can different disclosures like a contingent liability. Anybody knows what is meant by contingent liabilities? The liability which is likelihood, which we can say, the chance of occurrence. So likelihood, it's mean the chance of occurrence something. So if it's more than 60%, like the Facebook steal the customer data, basically the customer data, so they sold it to for different purposes. So this is called, they have a case against them in the EU Court of Justice. EU Court of Justice in the European Court of Justice. So if there are the more than 60%, the company will lose this case. So if they lose it, they have to pay damages. Yes, damages come are the penalties. So penalties, if any penalties they will pay, that's so there is a chance. So we must disclose in our financial statement under the note, because these are the it's a liability, it's a future liability which we have, and that leads to be even. So because always accounts need to be true and fair, always our reports, because it's a reporting unit, so reports should be true and fair. Okay, next we look in the quality of financial statement. So what is come really is to prepare the financial information to attempt to maximize the statistic to benefit. So that may influence this. So relevant the previous information, the relevant which is. So we need to make sure, we need to make sure we have a properly so relevance mean, the uh, all the information need to be relevant to be the people can make the decisions based on information, faithful, complete, neutral, and free from the error. So information need to be free from errors. So anybody any questions, so please ask me or drop me, carry on chatting with me in the chat box. Okay, next we looking the enhancing qualitative characteristic. What are those? So enhancing, these are comparability. So financial statement, if we are preparing one statement is 4 months, another statement is 5 months, so that won't give the comparability. So every statement we need to be prepared within 12 months. So between the entity and also one entity between the different time period. So no, we need to be between entities, we need to be a one time period, so that increase the comparability. So verifiability, so they provide the assurance regarding the reliability of the information. So the information we are saying asset. So when we are saying we have assets of 20 million, so 20 million worth of asset we should have, and these assets should be, if we are saying inventory, we have inventory mean is stock. If we are saying inventory, we have a worth of 30 million. So if we have 30 million worth of inventory, so we should be in our warehouse that, so we can verify it, or we can verify the independent reports as well where we bought it. We can we have invoices, to whom we bought the inventory initially, and the timeline. So timeline, or we can say timely information will be available when you will finish our recording our financial statement at the end of the year. So maximum within 90 days the information should be on the public domain, but it should be try to be within 30 days after the audit and the information finalized and all the material information. And so because it need to be true and fair, because people can understand it, people can make the decision based on the information. Understandability. So understandability mean so financial information need to be understandable. If the financial statement is not understandable, so then we need to look around the financial statement is understandable. If financial statement is not understandable, like one year we're doing in English, next year we're doing in Hindi, Urdu, or we are doing in any other languages, so that can't be compared the last year this year. So we must need to be, and the user, you need to be normal human being, those have a basic understanding about accounting and finance, can understand the information. So that's we need to be going concern. That's concept carry on coming, which is we need to be make sure in the reporting we report going concern as well. The business will continue operational existence for foreseeable future without the need or the intention to cease. So the business on the current situation will carry on doing business as a normal. That's come under the going concern. If you have any questions, so please ask me. Okay, so we need to okay. Anybody any questions? So let's we move to next now. Okay, so next we're looking now materiality. Materiality I already explained you significant. Anything is a significant, like all the income and expenses should be shown in the financial statement. So this, if we are missing it, you maybe heard about Enron, the company being Enron, and you maybe heard about World Telecom. The company is bankrupt. Even the actually lot of telecommunication. So please, we need to go through all the. So actually, the overstated income, the understated expenses, lot of material things they not reflected in the financial statement there, and after a few months, the company collapsed. So we need to look around substance, our form. So any substance information which should be included in the business entity concept mean all the businesses business entity mean is our organization. So every organization we need to be look around as a separate entity, separate organization. So if we are producing consolidated statement, so you should produce separately if the user have. So user can make the right decision. So always need to be look around the business entity. Accrual. Anybody know what is meant by accrual? Accrual, also known as matching concept. A matching concept, it means the financial statement should be record all the transactions not on based on cash when this happen. So whenever transaction, think about gas, electricity bills or energy bills we getting maybe after a quarter, but our accounting period finish on the 31st December. So we should include that the year expenses in the year, because payment will maybe make actually after 3 years, because if we really want to reflect what profit, what loss, what income we have in that particular year, instead of so like a credit sale, so we don't need to include the credit sale, we should include the credit sale because the sales is happened, but the cash will come maybe in future. So always we need to be look around accrual basis, also known as a matching concept. So we record all the transaction not on the basis of the cash, but on the basis of when the transaction is happened. So fair presentation, always the information need to be fair in term of we follow the accounting standards, which will go through various standards, and that's really, and we need a representation and consistency. So always we need a consistent in term of the period of the publish accounts. So always we need to be focused these in term of the consistency. Anybody any question? So regulatory framework, a national regulatory framework meets the specific business and legal commercial requirement, and individual countries may be legal requirement, financial reporting requirement. And so that's we need to be look around. Like in the UK, we have a GAPS and SAPS, a general acceptable accounting standard. If we're doing business internationally, so maybe it's good to be follow international reporting standard. In many cases, the national regulatory framework, different country maybe have many common or similar elements, but the global nature of the investment and the business operation that is supplemented by the development and element of international regulatory framework and include reporting. So all this we need to look around. Financial reporting standards we need to be follow. Financial reporting standards provide the guidance how the accounts for the specific transaction and the events in the financial statement. Historical, many countries develop their own national financial reporting standard. UK produce the financial reporting standard to apply, and then the preparing the company's account to the UK standard FRS, financial reporting standard of UK. And international financial reporting standard is called IFRS. And the word developed for the application of the multinational entities by business entities within the country. They did not have their own national standard. They can use international standards as well. So expand more countries adopt and use IFRS either full or via harmonized processes of the national standard. So stock exchange listed in EU must now prepare their annual financial statement in according IFRS, International Financial Reporting Standard. So the structure of international financial reporting system or regulatory, how the system work. So in IFRS is a foundation, then they set international financial reporting interpretation committee then they have a international accounting standard board. So committee pass it and then pass to the international accounting standard board, then international standard boards, then they also have a international financial reporting council. So then the council approved it. So committee, board, and council. Any question? If you have, please carry on chatting in the chat room, in the chat box. And International Financial Reporting Foundation, independent, not for the profit foundation, is trustee of the foundation, appointed member of the various subsidiary bodies. They are also responsible setting and approving the budget of various bodies, determine the strategic directions, promoting IFRS, International Financial Reporting Standard. The key objective to develop a set high quality, understandable, enforceable, acceptable reporting standard and promote their use and application. So that's really the purpose of promote and use. So International Accounting Board is an independent body. They normally is a responsible publication of IFRS and IS like International Accounting Standard 1 is about the presentation and preparation of financial statement. So financial statement prepared under IS1. So recently IFRS 16 been released, which is about leases. So all the leases should be reflect now, because in the past we used to be just financial lease used to be, and the company not used to reflect, not used to record, and not used to provide the information and their commitment under the operating lease. Operating lease mean like a rental contract, how long they are bound in a contract, that should be represent, and that should be create a liability. So IFRS is council provide the forum like I earlier explained, then the forum, all these pass the new accounting. So conceptual framework is a coherent system. So what is a conceptual framework? Is a coherent system, interrelated, objective, fundamental, that leads to be consistent standard that prescribe the nature and the function and the limit of the accounting and the financial statement. Board conceptual framework is known as a conceptual framework financial reporting 2010. The basic objective is to provide logical, sensible guide preparing the standard and applying them. Anybody any questions? So please ask me. So following topic covered under the qualitative characteristic, definition, recognition, accounting concepts, which will further go through recognition element of the financial statement, like we discuss about asset, liabilities, equities, and all, which we explain. Historical cost. So measurement of element in the financial statement frame identified the possible measurement basis historical cost. So financial statement can be based on the historical cost. Like balance sheet is always based on the historical cost. Current cost, balance sheet, or some companies can be based on the current cost. They can revalue. Realizable value. Realizable value mean the value which is we can sell it the asset. The market value, the value which our people are willing to pay. The present value, we maybe also call the carrying value or the present market value as well. So we can record the transaction on the basis of, and this is all the framework guide us, how we can show. Planning level. So when we are making any plan or in our organization to look around the performance or long term, so we can follow these standards. We can look around the long-term perspective, looks at the whole organization. Tactical medium-term look at the departmental or divisional level, and operational short-term concern day-to-day. So in the long run, really we want to be promotes. Next, we looking now, our learning outcome 2 is more about, where we're looking about ethics and ethical behavior. So it's ethics mean is a moral principle, where we need to discuss about is what is the ethic is a principle based on the rule based approach. Ethic is a principle based approach, is not a rule based approach. Rule is all the legislation which we supposed to be follow. These become a rule. So organization ethical code of ethics we discuss in the one of your previous unit if you already completed me. So we discuss about the professional code of ethics, PEPCO, which is Popular People Chat in Office, Professional Behavior, Professional Competencies and Due Care, Confidentiality, Integrity, and Objective. So 5 professional code of ethics, which we discussed. So all their major purpose to promote more and they increase the trust of the public, reputation of the profession. Okay. Why we behave, the law and regulation, reputation and standard, and maintain the public confidence and protect the public interest. So avoid the conflict of interest, like you have a shares in other company, you're a director in the company, you're the shareholder in the company, but you are also a auditor as well. So when you're doing audit, so you're not really writing something against it because you want to be on the more dividend. So that's why maybe you're not giving the true and fair view about the financial statement compliance with the rule and regulation or ethical standards. So be objective, act in the public interest, maintain the knowledge, behavior, skills. So all this is quite crucial if we are working. So fundamental, like earlier I mentioned, integrity, objectivity. These are the 5 professional code of ethics, which all, as a professional accountant, we're supposed to be follow. And in the incorporating when we prepare the reports, we're not supposed to be compromise all these 5 professional code of ethics. So conceptual framework and accountant code of professional ethics set out basic problem solving procedures, identify the threats to the fundamental level, evaluate the threats, and apply the safeguard. So that's why conceptual framework is a help us to evaluate the threat, apply the safeguard. So these standards, those being set up and the conceptual framework, these are the standard, help us to be protect our these are quite the crucial things. So we need to be promote the profession. So these are the safeguards, so really we need to be focused on. So next we're looking the principle based and rule based approach. I earlier mentioned it's a principle based approach, comply with the spirit, bigger picture, flexible changing circumstances, promote the development of skills and judgments, create culture and awareness. Of course, both approaches, rule based or the principle based, clear cut correct course of action if it's a legislation, easier to enforce. But the ethics may be near to some people say testing on animals is absolutely right. Some they say no, they have their own rights as well. But when we're looking the wider interest of the public, our community might be testing help us to protect future animals as well, or the current animals of the diseases, so these are all come principle and the rule based approach. So we need to be looking on, it can be argument in favor or against these approaches, but all have both, have advantages and disadvantages as well. So compliance with the law, we discuss about the rule-based approach come under the criminal. That's mean between states and individual. The individual should follow the state rule. That's come if we not follow it, it can be charged under the criminal law. And the civil law is mean related to the conflict with the community, with the moral principles. And these are not punishable, but these, improve. So accountant affected by the law, which are maybe not is the obvious health and safety, employment protection. All these need to be look around and we need to be report. So accountancy profession, FRC, Financial Reporting Council, regulate accountancy and all the other reporting, financial reporting, increase the confidence and the accounting professions if we follow it, and we'll set the self-regulatory standards as well. Anybody, any question? So top thing structure wise, so International Federation of Accountant, all accounting body, they are member of International Federation of for Accountant, and then International Federation of Accountant, they set International Ethics Standard Board, and they set the ethics standard, and then all these accounting bodies who are members like SEMA, ACCA, or various others, those are the normally the financial accountings, they follow these, and we have to be, if we are member, and we have to follow these professional code of ethics as well. Consultative committee of accountancy bodies are accountant bodies. So IAS is called Institute of Chartered Institute of England and Wales. So these are also member. Institute Chartered Accountant Scotland, Chartered Institute of Public Financial Accountant. So these are all the members, and they're sponsoring ATHE. So we need to be, ATHE also is accounting technician in the UK, so they also member. HMRC, we need to be followed there in the class. So business ethics and the professional, all these help us integrity, honesty, objectivity. We should be accountability more in the so that will help. So key principle for public life, if you're working in the public organization, you're supposed to be honest, you're supposed to be objective with the profession, you're supposed to be accountable of your action, your openness, true, transparent, honesty. So all these are the NALON principle is being the approach being given, so which we need to be follow. The code of conduct, we need to be code of practices always set in our organization to promote. All this come under the sustainability. So under the conceptual framework as well, we need to look around the sustainable environment, meet the needs of present without compromising the ability of the future generation. Like if you are polluting now too much, that will help you, that will reduce the ability of the future generation with the diseases or other environmental issues. So sustainable development, we need to be focused. Corporate social responsibility, as an organization, we need to be, lot of company like hand pump scheme, food bank, Unilever or Procter and Gamble or various other, they are always focusing on the corporate social responsibility and doing corporate social responsibility marketing as well. So sustainable financial profession, triple bottom line, we need to be we need to be planet, profit, and people. We need to protect 3 P's, economic, social, and environmental. All we need to be focused on. So that's it's okay. If we don't do it, there are the lot of risk involved. So we need to be focused on what type of the risk. If you don't follow it, all these it's more not transparent. Operational risk, it can be leads to internal fraud, external fraud, employment practices, all so we need to be follow. We need to be true reflection, account need to be true and fair. Reputational risk can be, if we don't follow it, it can be reduced to leads to further risk. Event risk by the source can be external like pest analysis can be leads risk for the business, and we need to regular measure it. We need to publish the report. We need to reduce it. Physical, social, political, and economic risk can be in a business. So we'll move back to and we look, did we cover all, or if any point, we can generically discuss. Anybody, any question up to now? Okay, so we'll discuss. We discuss about history of accounting and information. We discuss about accounting framework, growth strategies, budget creation, all investment decisions. So an investment decision which we'll further go through as well, like investment appraisal, which you learn in the other unit. All these international bodies, like we discuss about the framework, they make strategies to be improved. Conceptual framework we discuss about reporting standard IFRS 16. I mention you International Federation of Accountant. I mention you International Financial Reporting Standards. So framework we discuss about principle based and the rule based system and importance of regulatory framework. We discuss about IASB, International Accounting Standards. And then we discuss under learning outcome 2, we discuss principle and rule based and the guidance. We discuss about accrual concept. We need to record the transaction not basis of the cash. It's also known as a matching concept. Prudence need to match with the reality. Materiality, not significant transaction need to be missed in the account. Consistency, we need to be followed the consistent 12 months. After this we need to prepare the going concern. The company will carry on doing business as a normal. And we discuss business entity concept. It's an organization known to be as a separate entity, should reflect the own performance. And the money measurement, all the transactions need to be measured in terms of the monetary value. Duality and the stability and objectivity, we need to be make sure stable, we not duplicate. We need to be objectivity, not supposed to be compromised. If you're a professional accountant as well in the business, you should stick with it. And these are all the things we discuss under learning outcome 1 and 2. Anybody any questions? So please ask me. So today we address our learning outcome 1 and 2. So today lesson. So please. So next lesson we'll go through. Okay. Let's. Anybody any question? So anybody any question? So please, if you have any question, you can ask me now. So sorry, I mute you as well in the back. Ground was a bit, both sides. So we need to be look around. Lesson 1 is all about learning outcome 1 and 2. My email address is both there, my personal, and you can copy me my personal as well. So we address these. So we discuss about the conceptual framework, regulatory framework. We discuss about accounting concept, prudence, materiality, and various things we discuss. If you have any question, which will go through for the lesson. In the next lesson, I'll try to be cover your learning outcome 3 and 4, and then we'll finish this unit and we'll a bit recap on how we can address and where we can find the information. And I'll upload this lesson and the recording on Moodle. So please, those that are listening this, follow the Moodle. If you have any question, drop me email. I'll get back to you as soon as possible. Hope so. I will see you all next week and have a wonderful time and speak to you again then. Thank you. Bye-bye.